Hello traders, Gary Wagner here. It is 10:15 in Honolulu, 4:15 in New York on Friday. Happy Aloha Friday as we say on the islands. It is the 6th day of September 2024 and this is the evening report for gold and silver, our weekend review. In a volatile trading session, gold dropped in double digits today after the jobs report revealed that last month 142,000 new jobs were added and they revised July down to 89,000. Economists polled by Reuters News were predicting that payrolls would increase by 160,000. This caused the dollar to rise, and active sellers entering the market took gold even further down. Currently, we have the most active December contract down $21.60. That's a net decline of 0.85%, taking December gold to $2,525.50. Typically, when gold goes down, we see silver go down with a larger percentage decline. That's exactly what we saw today, with silver giving up 91.5 cents, 3.12%, taking the most active futures contract to $28.25.5. While dollar strength did account for some of the decline in both gold and silver, the vast majority of today's sell-off in the precious metals was predominantly the result of active sellers. The big story today, as far as the dollar is concerned, is not so much the gain of 0.11%. It is the full percentage point range that the dollar traded within on a single day. The high was 101.423 with the low of 100.578. The dollar index is currently fixed at 101.203. To give you an idea of the incredible volatility found within the dollar index, take a look at this 5-minute candlestick chart. I would venture to say anyone can see when the Labor Department released the jobs report. It is this exceedingly large and long single candlestick that occurred. This one candle represents the first 5 minutes after the release of today's jobs report. In other words, the dollar dropped in excess of 0.5% from 101.33 to close at 100.79 during this 5 minutes after trading to a low of 100.57. While it only took 5 minutes for the dollar to drop by just shy of 1%, it would take over an hour to recapture that to move to the intraday high. As I said, the dollar settled up fractionally, up 0.11%. In contrast to the dollar, when we look at a 5-minute candlestick chart of gold, this represents when the jobs report was released. The first 5 minutes took gold from 25.45 to 25.54, a fractional gain. But look at the methodical price decline throughout the trading session. The low did not occur till 1 o'clock in New York, and then it settled still down in double digits, about $21 on the day. While today was a fairly volatile day when we looked at the intraday, when we step back and look at the daily as we are currently, what we can say about this third primary wave is that at least for the last month, since Monday, August the 19th, after gold popped above the former level of resistance from approximately $2,510 up to about $2,522, is that the former level of resistance is seen here and here effectively became support after this large move. However, from there, rather than continuing to move up and gain ground, we have seen gold trapped in a sideways trading range between $2,510 on the low and approximately $2,560, the recent record highs that occurred last week. That being said, a solid observation would be that this sideways trading action is actually gold finding a base, finding support above $2,500 before, as I believe it will, continue to move higher past $2,580 and as high as $2,600 as we get closer to the end of the year.
The majority of this week's 3.5% decline in silver was made today when silver traded lower by around 90 cents. We spoke last week on how our target for this second wave would be anywhere between a 50% retracement at 28.82 and a 78% retracement at 27.77. The low achieved today at just around $28 is a historically significant price point, and therefore I believe we could have finished our second wave and should be seeing a third impulse wave to the upside beginning sometime next week. If this proves to be the case, where could we see silver trade to in the coming weeks? We will perform a Fibonacci extension off of wave 1. A wave 3 is often a 1.618% extension of wave 1 and should always be at least around a 1-to-1% relationship to wave 1. So with that in mind, we could expect silver to trade to at least $31.73, which would be a pivot from bearish to bullish for silver in the coming weeks.
This has been Gary Wagner
and Joseph Wagner,
wishing you as always good trading. We'll talk to you next week for our daily evening reports.